Welcome back, and joining me for a closer look at what's played out on the market scene today is Craig Pheiffer from Sasfin Wealth. Thank you so much for your time, Craig, on this short week. Just as we start off, what are you looking at in terms of what is characterizing the week in markets?
Well, we're in the thick of earnings reporting season, so those numbers are coming at us thick and fast. We've got 4 of the Magnificent 7 reporting this week. And that's all in the space of, the 3 trading days that we have, excuse me, to digest all of this. And along with all of that earnings, all of the earnings numbers, there's a lot of on the economic front as well. We've got US PCE deflator, give us a view on inflation. We've got the monthly jobs report, the employment report on Friday, give us a view on how the economy is doing in terms of employment. We've even got the JOLTS numbers tonight on job openings in the US. So those numbers also coming thick and fast. We've also got first view of first quarter GDP out of the US and the Eurozone. And that's not to mention all of the local stuff that we've got, which won't be market movers, but things to think about as well.
All right. Well, I mean, something that's happened on the tariff front is that the Trump administration has said that they will be easing on import duties on car parts coming into the US. Would you say that the saga is moving in the right direction, or maybe it's too early to tell with these bits and pieces of developments that we're getting?
Yes, ongoing uncertainty, but I suppose this is a little bit of relief. It is heading in the right direction. It's still going to make cars a lot more expensive than they were, but maybe not as expensive as they could have been. Let's put it that way. So maybe not having double tariffs on parts and the like, just because they're made of steel and aluminium and the like. So heading in the right direction, but still higher prices to come.
Well, talking about car developments going in the right direction, we did have a trading statement for 6 months coming out of We Buy Cars, and actually their earnings going in the right direction. Their core headline earnings saying that they expected those to rise by as much as 28%. But interestingly, I did see that share price took a knock of about 3%. What was your take on that trading statement?
Yes, on the face of it, good numbers. If you look at the core headline earnings, so the essence of the business, it is growing. They said 24 to 28%. But they did issue a whole bunch of new shares in a few tranches with the listing. I think we've been listed about a year now. And those sort of diluted those core headline earnings down to growth of just 0 to 4%. So that was potentially maybe a little bit disappointing for the market. But overall, one has to think about where we're going in terms of the softer economy that we've got, whether people are maybe going to hold on to their cars for longer, if that might be a negative for the company, or if, used cars are going to be more the thing to drive and increase demand for their goods. So I think they're in a kind of a mixed space at the moment. And let's see, they've just been listed for a year now, how they continue in this very low demand environment.
But not a lot of color in that, but also not a lot of color in the Raynet update that we got in terms of their net asset value per share, net asset value figures. What was your reading of those numbers?
Yeah, I don't think there's very much you can take from that at all. It was the value of, or the net asset value of Raynet Fund, which is a part of Raynet Investments, a substantial big part of Raynet Investments, the listed entity. And that was barely changed. I think 13 million euros on 6.9 billion euros. So no big change there for a start. But also the fact that it's just part of the fund. So one can't fully derive the net asset value of the shares just from that information alone.
All right. But we did get a lot of information from MTN Ghana with its update for the first quarter, and actually really good numbers. You had double-digit growth from the top to the bottom line. Would you say that, we're starting to see quite solid fundamentals on this front?
Yes, growing subscribers in kind of all the areas, on the mobile side, on the mobile money side, on the data side, also data picking up 10-odd% in terms of new subscribers. So I think doing well across the board. It is a fair contributor to MTN, the main listed company. I think it's still behind South Africa and Nigeria, but still has the biggest operating margin. So it's very important in the life of MTN, and these do look to be solid results, and as you say, heading in the right direction.
All right. Well, talking about the right direction, let's get to your stock pick for today. Craig, what are you hanging your hat on?
I'm hanging my hat on a very expensive hat stand in the shape of Hermes, luxury goods group. More famously known for their leather goods. It's the biggest chunk of their earnings, and I'm sure you own your own Birkin bag or your Kelly bag. And those are its most famous offerings. This is a company that doesn't come cheap. We're talking multiples of 50 times forward earnings at times, but it's been a lot more expensive than that. And I just highlighted it's a stock that we like to have in our portfolios for the longer term. We have seen a pullback from what was it, 3,800 or 2,800.
Yeah.
Down to 2,400 euros at the moment. So it's got a big price tag itself in terms of price and valuation. But, use a pair as a weakness to pick it up. You want to own it for the longer term for sure.
Well, thank you for that compliment, Craig, that you see me as owning a Birkin bag, because the last time I had someone from Sasfin, David, he actually said that he doesn't see me as an Hermes person, but rather Zara. So, but I'll take yours. Thank you so much. Thank you so much for your time and for your insights there. That was Craig Pheiffer from Sasfin Wealth.